Welcome to TradeTheNBI.com. This is Jones Reports for the 17th. Well, we continued on with the turnaround move off the support because, again, straight up no other choice but to bounce off the bid that, the Fed has set when they reach those algo levels and we see the buy signals. You got nothing to do when they're supporting at that, and that creates the bounce. We still have the dip below the red line here on the extremes. So from that standpoint, even though we've got this current buy configuration, when we do get any type of a retrace signal, that would be the marker. But we would expect to make it back to the highs on this full dip down here. We're looking for green to move back above the red just to clarify that move. From an NQ standpoint, again, it's going to be stronger simply because everything internet related has certainly outperformed the base portion of where economic activity is at this particular time, though we are starting to see some improvements outside of that. But the job losses, and then we have that facing the end of this month when some of those extended super benefits end, and that will be the real test of whether they're going to extend them or not. That really is going to be interesting given an election year. There's the side of the Democrats who don't want it, are going to ask for ridiculous things because they want to have some Trump weakness going into the election, but they also want to show that they've done something, vice versa on the Republican side. So that's going to create a whole dynamic that's really going to fuel a lot of, I think, added volatility into our, summer months here going up, particularly as we lead towards the election and that. So this is going to be some fun stuff. The euro right here, based on that support, still rising with the gold. So until that fades off, it's probably not going to fill until we get a little bit more softness there, and that really is going to depend on what some of the numbers coming out of the U.S. are, because if the growth in the U.S. starts to show any significant real movement, you're going to have a capital flight, because still U.S. would be better for money than Europe, so you're going to move your money, but at least Europe has moved towards more movement, which I think that is giving plenty of support for it right now. And from an oil standpoint, we're just sort of in a holding pattern right now until we get some of those numbers. We're starting to see some improvement in the shakeout right here, which indicates that maybe we're going to break out and head towards that 50 expectation, which is really what they're trying to push for. And I think if we get anywhere near that, you're definitely going to have a gold breakout above the highs here. That's no question about it. So we started up, we hit that 3,000 resistance right up there at our 3013 and didn't come back down to the 3075 in between there. And then we had some really nice support move from it. And once we got that, we broke out and moved right above. And a lot of that took place in the early move. And then we just kind of backpedaled in between. We had this the 3120. And of course, once we built this whole new set of positive extremes, you have some ranges in between there that would fill. But really good size volume. I mean, when you look at how long this day was as far as range, we had quite a bit of activity because we dropped all the way back down. And, once it's just that little test. It's like, okay, well, are they going to step back in? And sure enough, as soon as you get to the 3075, 3050 was the real bottom side, but they built it right up back from there. And then again, right as we hit those same two ranges, they just fought it back and forth, and that just became one of those where we just keep acquiring it. Then we came back again, tested through there. We had a dip below the red line, so we knew that we needed to get a retrace into that effect, and came back pretty darn close to it. It was a little bit north of it right here, and it really kept catching some good strength going through into the after hours. And of course, that's their opportunity when you have that weak European it's late Hong Kong, early Europe session, and with that low volume, you can really drive it, and that's what they do. And this is where we get a lot of these pre-set up, didn't have as many positive extremes within it, so that really creates a nice opportunity to keep holding it just above, and that's what we look for. But the volume range in between is so nice. Just take what it gives us and keep going. Still think we're going to be building towards 32 to 3,400, and then I think some of it's going to, at that point, be whether the Fed wants to continue driving it, or whether or not the market is just going to accept that devaluation of the dollar construct and start building towards an ultimate 4K when things start getting back to normalization, because you're still going to have this massive flood of dollars into the system, and that has to be absorbed and accounted for. And that's just the way it works. It's no different than inflation of the 70s. That saw home prices go from modest to more than double what they were, and that kind of situation. So that's the long and the short of it for now. As always, though, something unique or interesting and any updates, I will certainly send them out. Trade well.